Oh my God, gold, you're really testing my patience. What is up, everyone? How's it going? Today we made $1,400 live on stream on YouTube, and I'm going to run you through exactly why I took the position, as well as how I'm dealing with the increased volatility at the minute, as well as what's going on with Trump, the tariffs, all of that sort of shit, and how I'm changing my trading in order to be safer during these crazy market conditions. So jumping straight onto the charts here, you can see exactly what position we were in just before we actually took the trade. Now, realistically, gold was very bearish yesterday, but due to some fundamental factors, they started to negotiate the tariffs and that sort of thing. We actually had a pretty decent retracement here throughout the morning and London session. So going into sort of late London session, we were actually looking at buys here to continue back up towards the top of this range. And what I did here is essentially, as I normally do, mark out my levels. We had some very clean areas that I believed we needed to tap into, as well as that we had also made a good little closure right above my area of interest here. As you can see, we closed above this range right here on the 1 hour. And you'll notice right here as well, immediately, we have a sort of retest area, liquidity grab area right here, as well as 3005. That we've tapped into and rejected off of many times. Now, it was around 9:30, as you saw, the 30-minute candle closed, and what happened? We essentially came right down, tapped into the level here, and started to reject immediately. But I'm going to drop down to the 15-minute time frame quickly, because that's actually what I looked at in order to take this trade. And we saw very quickly, as this 30-minute and 15-minute candle closed, what did it do right now? So obviously, taking a step back here, you actually have a fake out on the 30-minute time frame. You can see my level right here, 3005. We pushed down and closed below it, and then actually closed back above. Now, if you've watched my course or the free course on YouTube, you will know that essentially a fake out means that you close out of the range and back inside it. And when that happens, you are extremely likely to fill up towards the next resistance level. So with that in mind, we're looking at buys right now, and we actually wanted to catch a wick entry. Now, the reason I was comfortable with taking a wick entry, meaning I was taking an entry before the candle actually flipped and anticipating that flip, was because look at the market structure that we have right here. You're consistently pushing up and making higher highs and higher lows as we go. So now, as you see us make this low here and then confirm a fake out back into the range, what does this look like to you? This looks like this area right here is now a higher low being made for you to then continue up towards the top of the range. So that is exactly the confirmation I needed in order to get into my buys. And once that 30-minute closed, like I said, we were looking for a bottom wick on the candle, and there was numerous ways that we could manage this. But I'm going to talk to you about exactly why I took a wick entry instead of waiting for the flip just now. So if we wanted to take the flip, okay, wait for this candle to close, open with the bottom wick, and then flip, your stop loss would have been all the way down here towards 3001, which was around 80 pips. Now, you guys know me, there's no chance I'm taking an 80 pip stop loss, especially with the lot size that I use and all that sort of thing. It would just be ridiculous for me to take 80 pips of risk on a trade. So what I actually did was I waited for a bottom wick to be made on this candle. And it was actually, let's just zoom in here to the 5-minute, just so I can show you the exact candle it was taken on. It's actually this exact candle right here. So as you can see now, we come down, tap into my level where I was expected to take the buys from. And at the moment that we tapped that level, I got in some buys. Now I got slipped a little bit, but we got into buys around 3006.9, around that area there. And essentially what we were then doing is waiting for this candle immediately to push back up and flip on the 30-minute time frame. And the 30-minute time frame is this candle right here, the 5-minute with no top wick. That is your advantage point, because 90% of the time, if a 30-minute candle or a 1-hour candle pushes down without a top wick, it is going to flip. So I knew for a fact that we had an advantage point there. That's where I'd be moving my stops to break even. So let's mark that out. This is our stops to break even level. Take profit, again, like I said, was filling towards the top of the next range, just here. And then your stop loss was still below this structure. But now, instead of it being 80 pips, it's now only around 50 pips. So essentially, you've saved yourself a lot of risk just by entering on that wick entry. And that allows me also to get a better entry and advantage point. Now, as you can see, we actually decided to pop up a little bit the moment this candle opened. So we actually saw around, what was it? Around 11 pips of profit. It was actually on this current 1-minute candle here, but we saw 11 pips of profit almost immediately as this candle opened. And we came up towards the reflip, but then we actually came back down into drawdown. Now, I was thinking about managing and going break even at this point, but with all the time frames aligning, the 30, the 15 minute, the 1 hour, I was very confident on the position, so we decided to give it some breathing room. Now, the entire time with the volume moving like this, you watch it on stream if you go back and look at the clip, but this looked to me like a liquidity grab. The structure was great, everything was great, and we were essentially pushing down extremely aggressively. Rather than making any structure, we just sort of ripped straight down, and when that happens 90% of the time, that is your liquidity grab when you see a pop, and it's going to actually retrace and continue back up. So I was very confident, even when we came around 20 pips away from stops, I was very, very confident that actually we were going to retrace, and that low right here was actually Asian low, and we swept the previous Asian lows before, so I was not too worried. That low should not be broken. It was pretty safe. Now, as you can see right here, what happened? Well, this is the exact thing that we were talking about played out. We saw a very, very strong pop, as you can see, and then what happened right here? You flipped on that 30-minute, which I just spoke about, which was my advantage point. So as you can see at that point, the 30-minute had then flipped and made a small top wick. Once that happened, what did we do? We pushed our stop loss to break even. I closed 75% of my position at around 20, I think it was around 23 pips with slippage, you know, once it popped back down. And that was essentially the close. Now, in my opinion right now, everything looked good. The 5-minute closed bullish. The 1-minute structure was absolutely perfect. You know, we rebroke these highs and we were looking very good. So that is the reason why I didn't close full, because at that point, I'm doing multi-time frame analysis this whole time. I'm looking at the 1 hour. The 2 hour also needed a top wick. The 2 hour still had no top wick as well, which was another key confluence for me. And yeah, realistically, there was no reason why we shouldn't continue up. So I closed 75%, but kept a runner. However, unfortunately, as you would have just seen then, we actually came straight back down and hit our break-even point right there. Now, you got out break-even, and people might be saying, oh, you could have held it and let it run. But if we actually continued throughout the trade, what would have happened? You actually would have seen a large drawdown. And then, as you can see right here, our initial stops, which were below this low, would have got taken out. So we knew our advantage point very strongly was that 30-minute flip. That was the point where price could either say, okay, cool, we're going to rip up and continue, or you know what, I'm actually going to reverse. And that is the definition of an advantage point, okay? Price should tap that 30-minute flip right here, which it did, and then it makes a decision from that area. So we know very strongly to manage risk around this level right here. So that was the trade. Again, not the biggest of trades, but again, you can't complain with a 4-figure profit day. I'm never ever going to be upset with that. Profit is profit nonetheless. And that's also the reason why I closed partials as well, because at the end of the day, we are trying to secure profit, right? No one ever went broke by taking profit. That's a very strong rule that I live by. And yeah, if I didn't take any profit, I would have either ended up with a negative balance with the stop loss being hit, or $0 with break even. So, you know, I'm never ever going to be afraid of taking profits. And that was the trade. Very simple, very, very strong management. I'm proud of the stream. You know, even during the drawdown, no one was upset. No one was freaking out, no panicking. We stayed disciplined, stuck to the plan, and trusted our analysis. And at the end of the day, that's what you have to do. Moving on quickly, I don't really cover many fundamentals on this channel. And the reason being is because I'm not the biggest expert. You know, I read Financial Times, I read financial news, Twitter, etc. So I'm clued up on brief sort of economic details. However, I'm the first person to tell you I'm not an expert in economic policy, monetary policy, any of that sort of thing. So I don't really discuss fundamentals with you. However, at the minute, with everything that's going on with the tariff war, with Trump, with the uncertain policies in America, there is massive uncertainty, okay? In assets like gold, the NASDAQ, whatever you're trading, you know, S&P, there is going to be big uncertainty, and with uncertainty comes a lot of volume and people sort of rotating from different assets to sort of safer, safe haven assets. Now, what that means for gold currently, as I'm specifically a gold trader, I know the same does apply for ES and etc., but I'm going to talk about gold just specifically right now. What that means for gold is these candles are absolutely ginormous. Let's just drop out of replay mode really quickly, and let's take a look at some of these candles. So this is a 1 hour time frame. What do you have here? 150 pips, and these are the smaller ones. Last week we saw some crazy candles. What was this right here? This was still Monday morning Asian, 800 pip 1 hour candle. That is ridiculous. If you guys are trading TRLS concepts, you will know that we are essentially trading with a very tight stop loss 90% of the time. And what that means is 30, 40, 50 pips maximum normally. However, I do want you to understand that you need to be aware of exactly where you are in the market and sort of the current market conditions and be able to adapt to that. So with price currently printing 100 pip hourly candles, 200 pip hourly candles, you are not going to be able to use those 30 pip stops. I tried it last week. I got wrecked. If you want to go back and watch the video, I lost 5K in a day. And yeah, go watch that video to see what happened there. But you will need to adjust your stops. So what I did at the start of this week is I actually dropped my risk and dropped my lot size quite significantly, actually cut it in half in order to enable me to actually increase my stop loss by a little bit. So you'll see today it was around 55 pips. I'm still not going crazy, not going 70, 80 pips, but I'm allowing myself to take sort of 50 pip stops in order to be, a little bit more comfortable with my risk. And realistically, I would advise that massively. It's very uncertain times at the minute. There's so much volume. People are getting taken out of trades in under a minute. So yeah, don't be afraid to reduce your risk during these times, especially since you can actually make a significant amount of money with these bigger moves. But if it goes in the wrong direction, you can lose a very, very large amount of money extremely quickly. So drop your lot size and yeah, trade accordingly. So you would have seen at the start the screenshots of the trade. I've gone down from my normal 15 lot size to around a 10, sort of 8, 10 lot size, something like that. And that is going to show you exactly how I'm dealing with this sort of current market times, because it's absolutely crazy. So yeah, that is the video. That's the trade I took. And yeah, as I said, be careful in these market conditions. If you are trading the rest of the week, jump into the live streams. I stream every single day for free live on YouTube. And other than that, I do have a few slots available for my mentorship program. Now, it's only for serious traders who actually want to become profitable. So I'm going to leave the link down below. Do not click it if you're not serious. There's only a few spaces, and I'm only taking on people who actually want to make money and actually dedicate some serious time to becoming profitable. That's the video. Drop a like, subscribe. I'll see you in the next one. Peace out. Bye-bye.